That brings us to an end of the pivot points module. Let's summarize things. Pivot points are a technique used by traders to help determine potential support and resistance areas. Pairs usually fluctuate between the pivot point levels, and price most of the time is going to range between R1 and S1. Pivot points are useful for range, breakout, and trend traders. Range-bound traders are playing the bounce and will place a buy order near a support level and a sell order near a resistance level. Traders who play the break are waiting for key levels to break so they can place an order and catch a strong move after the break. Trend traders use pivot levels to get an idea of the overall move of the market. Simply put, pivot points help you determine possible areas that cause price movement, whether price bounces off of those areas or breaks through them. Once again, using pivot point analysis alone is not always enough. It's important to combine pivot points with other indicators from your toolbox like candlestick patterns, MACD, crossover, moving average crossovers, the stochastic indicator, RSI, whatever you want to do. The more indicators you can line up, the stronger the signal will be to buy or sell and execute a successful trade.
Hey, thanks so much for watching. Make sure you join our free Discord channel to get access to all the cheat sheets and a bunch of other cool bonuses. The next video in the course is right here.